Where are you, Kevin? Anyway, the last couple of weeks have been quite interesting. There has been okay uh, some serious movement in the dollar and some serious movement in the Swiss franc, and there has been some quite serious movement or interesting movement to say the least in the euro, and there has been some reasons behind the movement. But before I get into the reasons, I want you to see what's been happening and I'm just going to point out the indices as usual, like what we do every week. If you look at the British pound, it did have some nice move towards against the primarily against the dollar, moving from 162 all the way up to the 165. If you look at the Australian, it had a couple of days of move, but it's pausing towards the end of Friday. If you look at the euro, there hasn't been much of a movement, but there is quite an explanation for this move in the euro. But the most interesting of all, if you look, is the Swiss franc. The Swiss franc has hit an all-time high versus all other currencies. I mean, this is absolutely, I mean, the highest it has ever been, particularly against the, or the strongest it has ever been. The high was for this week 117.73, and it closed at 117.52, which is a very strong close for the Swiss franc. Uh, Not as much. I mean, and you can see that the Japanese yen is kind of flat or within the range. The Canadian also pretty much in a non-directional, if you will, staying within the narrow range. The same as the Aussie. The only two that really had a distinct move, if you will, was the euro and the Swiss. We can understand if we're going to look at the gold, because you know there is some positive correlation between the gold and the Swiss franc. You'll see also that gold has been pushing higher. It has bounced from the 1462 and it's pushing higher. So there is a tendency to go towards the safe havens, whether it is the Swiss franc or gold. Silver also has some sort of support, but not as obvious as it is as we can see it in either the Swiss franc and as what we can see in the gold. The euro had this last 3 days, the move that we have seen in the euro the last 3 days. This has, as you well know, that there was an auction to sell the Portuguese debt, and there was a statement that the Chinese are interested in diversifying their holdings from foreign currencies from the and they are interested now in buying debt-based euro, debt-based in euro instead of buying most of the United States debt. And as a result of that, we have seen that this big push that came into the euro, bouncing it from the 140 all the way up towards the 143, if you will. And then it has been announced on Thursday that yes, they were interested, the Chinese are looking into buying euro base or diversifying, particularly in getting some euros, but interested is one thing, and actually buying and going into the market and buying the euro did not materialize. So that they really, all what they did there was just basically talk that they might be interested, but they did not. Also, there has been some announcements from the president of the Eurozone stating that the IMF is reluctant or is waiting to consider and see how the European governments are going to decide with regards to backing the Greek government, because the before the actually the before the IMF starts putting money, and that what has turned around and placed a lot of pressure on the euro the last couple of or at least on Friday. So with that we can expect some initial weakness in the euro come Monday, and we will take that weakness with a grain of salt. We want to see now that if there is going to be a follow through to the weakness to the euro before we actually begin to sell. We can see that we had a sell off, if you will, on Friday. Today is a holiday in the United States and it is a holiday in Europe. And if you look here, for example, at the euro dollar, you would see that it sold off from the 133, the 143 resistance level. It sold back approximately 60 points or 60 pips, but it is not that major sell-off. We did have a sell-off as a response to the statement that the IMF is going to be waiting to see how the European parliaments, primarily the German, the French, the Dutch, and the Norwegians, what they are going to do with regards to Greece before they actually are going to intervene and start giving money to Greece. And that, of course, if there is any negativity or any negative feedback, then that should have a major negative effect on the euro. And with that, if that's the case, then we can expect a sell-off. So that negativity or expectation of a sell-off is all what we can see now with regards to the euro is an expectation. If we get a follow through on that expectation, then we will be selling the euro. If we do not get the follow through to the downside in the euro, then we might be looking at actually buying the euro. This sell-off that we see here is weak, but it is not weakness that could be measured or could be a true representative of the impact of saying that the IMF is not going to be funding the Greece. If that was really as negative as it is, then we should have seen at least 200-300 pips decline in the euro as of Friday. With that, we don't know if this is just a muted effect as of the holidays, but it is something that makes the euro now the primary currency that we should be looking at as of tomorrow. Why? Because we have now a news event that's happening on the euro. We can tell from the news that it is quite negative, yet we haven't seen the reaction that we can expect to that negativity, and it is closed now at 142.78. We are trading in some aspects of Europe, but still, so the euro now is going to be the currency of focus for the coming week. Okay, so let's go and see the other currencies so we can measure it versus the euro. If you look at the dollar, which is again, as you know, the basket or the dollar has been unable to stay above the 76. That's the third time it sold off below the 76. It is now closed at 75. This is a pretty weak close, and it should indicate continuation to the downside, so we should be expecting that the dollar to continue weak, and we don't really have, we might have a short-term buy around the 75.08, but it's going to be a snapback. If you look at the Australian dollar, the Australian dollar, as you well know, we had a snapback or a pullback from the 104 from last week. But this close that we have here at 106.71 is a sell signal for the Aussie dollar. So the Aussie dollar for us right now is a sell signal. We have a sell signal on the Aussie. It is not. So we have a sell signal on the Aussie dollar because it has traded below the 106.82. It has closed the week at 106.71. We're looking at the British pound. This is not particularly a sell signal. Uh, we had 4 good days move to the upside, so this could be just a pause. We might have a slight pullback down, and that will be triggered by any action that we see either in the euro or in the US dollar. The British pound is still in a big negative setup in a big bear market, so it's not really what we're having is kind of a sideways neutral kind of move. The Canadian is a little bit concerning, if you will. I'm a little bit concerned about the CAD because, as you can see, it's quite negative here. We had it's still sitting. I mean, we had a decline all the way down from the 109 all the way back to close to par, even though if you see gold is moving in completely in the opposite direction. See, gold is moving in the opposite direction, which is closely correlated again to the Canadian. The same thing that you see with the Aussie is actually kind of stronger. So within the commodity currencies, which is the Aussie and the CAD, and we have something like the gold and the Swiss, if you will, you can see that the weakest of them, of all the commodity currency or the safe haven currencies, is the Canadian. The strongest is the Swiss franc, which is now settling at all-time high. So it closed the week, or it's trading now at 117.45. We do not have any sell signal unless it trades below the 116.97. The Japanese yen is pretty much the same as the British pound. As you can see, since October of last year, it has been trading in a quite a narrow range, and all what we had is a couple of days of a snapback, which are not really indicative of any specific moves. So with that, if I'm going to look at that, my first candidate, as I said, this week would be the euro, and the euro should be a big player for us on either the upside or the downside. So I'm going to put also next to the euro three negative signs, because it is now neutral. It is sitting at the 143 level, if you will, on the US dollar. If you look here, hold on a second, it is sitting now, it just snapped back from the 143.33, which is a major structural point, and all what we did, we snapped that back about 60 pips. If you look at the intraday, you would see that that is still a major uptrend. We do not have any structural sell signals in the euro, which would indicate, specifically after having all this bad news that's coming out of the euro today, that that will be the currency of play for the next week. So we are going to hold our positions in the euro. Either it's going to be very negative and we're going to get capitulation, and that also should be something to pay us, or it is going to be a major buy signal because everybody is going to be starting to cover their shorts in the euro. So we're going to have the euro as a focal currency, and we're going to see now that the next currency that we're looking at selling would be the Canadian. The US dollar is quite weak. The British pound is also weak. The next strongest currency that we have is the Swiss franc, and the yen, as you can see here from the chart above, is not particularly strong and it's not particularly weak. So we're coming into a holiday. Most of the currencies are maintained within a range, but the one that is giving us an initial clear signal would be primarily, as I said, the euro, followed by the Swiss franc, or the Swiss franc and the euro together, then the US dollar, and then we are going to be looking at the Aussie and the Japanese yen. Okay? So with that, I'm going to